You're tuned in to the MtG Cable cast, where they cover Magic, the Gathering Finance. All right? You don't know about it? You're tuned in right now and get ready to learn some shit. Buckle your seatbelts and light a blunt and get ready for the MtG Cable cast. Starring Reptar and Thirsty, them onion head motherfuckers.
And then we're good to go.
Alrighty, guys. Welcome to the newest episode of the Cabal cast. This week, we have part one of a two-parter on something we constantly talk about, and that is how crypto, the Dow Jones, and the reserve list mirror each other. So we're actually going to dive into the nitty-gritty. So this week, we're going to present the data.
Yep.
That's it. Here's our data. This is what we're looking at. This is a little bit of context to the data. Part two next week, here's what we think that data means. So, to start off with, we picked some basic cards to look at for Magic in the reserve list. They're staples, they have various levels of liquidity, and they're playable.
Mm-hmm.
Gaia's Cradle, UC, Black Lotus.
Yes.
Everybody knows them, they're tried true, they're blue chips. Then we each also picked another card on the reserve list for a reason, and you picked?
I went with Dream Halls. So in my investigation, I was looking for a card that pretty clearly demonstrated the cyclical nature of what we see when people swing trade in and out of the reserve list. And there are a lot of really good examples, and a lot of the high-end reserve list, as we will see, kind of reacts to various markets. But because Dream Halls was so cheap for so long and has such a narrow field of play, the price graph that we see with Dream Halls makes it very clear when people move into and out of, importantly, out of this card.
And I picked Grim Feast because I am a reserve list slumlord. And very similarly to Dream Halls, I wanted to show something that mirrored the cyclical nature of the reserve list, but did it in a way that was less tied to playability.
Mm-hmm.
Because Dream Halls historically has seen legacy play, it sees a lot of EDH play. Grim Feast has never seen play in anything, except for casual EDH. So I wanted to basically take a look at the market that controls it and what that looks like.
Yep, yeah. It was actually very hard to find a reserve list card for me that showed that nature and was not playable. I ran into that a lot, actually.
Yeah.
It was very clear to see trends in old school and middle school and pre-modern affect reserve list cards. So in doing something like this, it became tantamount to try and suss through what I could from the reserve list and find a card that just didn't see periphery play like you do with Grim Feast. It just wasn't a card that came to mind.
Yeah.
So
the other thing we did was we basically wanted to take a look at the last couple of years, and that will become clear when we talk about the comparisons between the DAO, crypto, and the reserve list. It's been kind of interesting.
So we wanted to start strong in a regulated market, so we wanted to take a look at first the DAO.
So, yes, that's where we wanted to start. It's the standard. Everybody knows it. You grow up, you watch the 5 o'clock news, and of course there's the ticker at the bottom. Well, you probably weren't watching it. Your parents were. Anyways, you saw, you know it. You hear about it all the time. Everybody's been exposed to it at some point. It's kind of why we wanted to start there.
Mm-hmm.
So to start with, we'll take a look at January 2020. So this is fresh off elections, everything, and all of a sudden, what happens in March of 2020? You take a look at this 3-year graph, and we see the Dow Jones take a dump, bigger than the one Andrew Lloyd Webber took on musical theater when he decided that's what he wanted to do with his life. Just craters. COVID.
Yep.
That's been one of the most important driving factors in the financial market for the last few years. March 2020 was when lockdown started. That's when we started seeing supply issues, everything else. People were staying home from work. Everyone was horrified that the economy was going to be crippled. That was it. We're all going to die. It's terrible. Get rid of it. Then throughout that year, we see a little bit of recovery periodically, and then we see another dip in late October, early November. of 2020. Now, this was twofold. This was, we renewed a lot of lockdown guidelines, and people weren't sure if the new variant was going to shut things down even more. And this was right after we decided it was safe to open back up.
Mm-hmm.
Also, election time. What happens just about every 4 years? The economy kind of takes a dump during election time because guess what? There's a lot of uncertainty around that. And that's kind of been the story for most of the history of the Dow Jones, outside of literally COVID caused the biggest crash percentage-wise in the history of the stock market. It was like 20% that it shrunk over a week, which is absurd. That was it. Those were the two big things. We have a few, little seesaws here and there. June, we have a peak of around 27, and then we drop a whole 10% in a day down to 25 and quickly recover. So what we see is a little bit of outside factors in a economy which is strictly regulated by the government, but still has outside influences on it. Environmental factors, global factors, all kinds of things that we just can't control, which compared to crypto, which is an unregulated market, drastically different.
Yes. Yep. Still related a lot to it goes on the economy in general. One of the things that spurred in this conversation was this year, in 2022, the U.S. tax return percentage by date was very low historically through April and into May. And a lot of things stagnated. So things like the reserve list and also movement into crypto and other financial opportunities when people receive that little bit of stimulus. And that's not really something I touch on when I went through this, because while it is a driver, it's not as much of a driver for movement into or out of crypto. And to start the section off, I looked at 3 of the larger coins, the most stable coins for the longest in Bitcoin, in Ethereum, and Litecoin. And there are a lot of other options to look at, but these have provenance as some of the longest running coins, some of the most respected ones, and some of the more stable options out there. So first, we take a look at Bitcoin in 2020, and we start the year at about $7,000. Now, by February, we hit about 10K. Then there's a retraction in early March, and we fall off a cliff on March 10th, all the way down to about 5K from that 7.9. Eventually, we recover through the end of April, and we see steady growth and an eventual jump all the way through to August. From here in August, we plateau for a little bit. We retract because reasons that I couldn't find. And then essentially at the end of October is just unbridled growth through the end of the year. And we end January 2021 at $29,000. Now we're going to see some similar things with Ethereum. We are going to see, again, some lags, some dips, some sawtooth, some plateaus, and the dates are relatively the same. We start the year at $127. We hit $284 by mid-February. We sawtooth for a while. We hit $194 in the middle of March, right before we fall off a cliff on March 10th. We eventually recover to $214 in mid-April, or towards the end of April. And from here, Ethereum actually gains moderately until mid-July. We are about $236-ish, and then we jump to $385 at the end of July. There's a bit of a retraction until unchecked growth at the end of October. And we end the year at $730 for Ethereum. The last one, Litecoin, is actually almost a one-to-one with the Bitcoin graph. But we see the same things again. We see growth at the beginning of the year, starting at $40. We hit 83 in mid-February. By the middle of March, we continue to retract to about 50, and then we fall off a cliff on the 10th. Now, Litecoin plateaus for a very long time after it recovers, and from there, it just jumps from 44 to 55 like Bitcoin does in July. It plateaus, it retracts from that plateau for a little while, and then unbridled growth from the end of October to the end of the year, closing out at $126. So it is a really interesting year for crypto, and the entire market, through the research that I did, basically rose into March, crashed, and eventually recovered. Now, what I couldn't find is if there was a kind of a gambler's fallacy here where people just thought it can't keep going lower, so we'll just hold. But when we come back and we start comparing things like the reserve list, we will see that people do swing, and they will swing back to their coins de joie once things go up. So that's a lot of that spike into plateaus that we saw. Now, this is the crash of 2020. This is a manipulated market, and a lot of this was done through, from what I could find, basically choking the networks. They basically, through the use of essentially a bot network, created stuck transactions, which then created mempool compression, which basically meant that nothing could happen. It just slowed the majority of the networks it was impacting, and this is nicknamed hammer botting. So it's just automatic transactions generated by bots that amplify previous problems in the network, and that created, this kind of run to exit the market when everything just kind of locked and froze. And so we see this really swingy market where people are they're just in and out, in and out. Things start to tank and they just get out, and then they come back when things look better. And there is that kind of tie into the DOW. There was that drop on, March, what did we see? Like March 25th?
March 10th.
Yeah. Well, on the DOW was March 25th, which is 2 weeks after, the crypto just dump. But those are not necessarily related. It's just pure happenstance that they happen, back to back. The data that comes out of this, once you start digging through these coins, what went on, the stock market on the whole, and then the reserve list, really do paint an interesting picture. What I found a little more interesting than 2020 was 2021 from a crypto perspective. But as far as the DAO is concerned, everything looks pretty decent, right? We're just on the up and up.
Pretty standard, yeah. So there's, a little bit of a lull in late January, early February, and then interestingly, all of a sudden, in early March, we just stay up. Well, you know what happened in March of 2021? Stimmy checks. Mm-hmm. So all of a sudden, the economy is getting back to normal. We have more faith in the Dow Jones and in the products it delivers. So the traditional market sees this and all of a sudden reacts as traditional markets do. If there's more money available, there's more money to spend, we'll make more money. And that generally continues up until about August, September 2021. There's a little bit of uncertainty about what's going to happen, with further stimulus checks at that point. That was when we had another surge of coronavirus. Yep. So yet again, uncertainty, whatever. And then we just finish literally the all-time high of the Dow was late December, early January. So we finish on a very strong note for 21. but pretty much just a constant upward slope is what you're looking at from the Dow Jones. Recovery hits, people start going back to work, and your traditional regulated economies all of a sudden decide, cool, we'll make a recovery. To me, the interesting thing was, kind of the inverse of with crypto. When stuff like, an income tax return or an economic stimulus check or something like that comes out, you wouldn't think the traditional markets benefit as much as the non-traditional do. Most people that have that, if they're going to want to impulse move into an asset, they'll go for something that's more approachable, which, believe it or not, to me, would be crypto, because I can literally use the PayPal app on my cell phone to buy crypto.
Yep.
But we see traditional markets do it now. So that was the best takeaway for me from the year, was seeing, okay, economy's fine, let's go for it.
Yeah, people have a little more expendable income, and then they can begin to move it however they see fit. From a crypto perspective, things are pretty interesting. So I'm gonna show the graphs for Bitcoin and Litecoin, and again show how they're basically tied together. So we start the year pretty decently, a lot of uncertainty for Bitcoin coming out of 2021, but eventually at the end of January we just see again unchecked growth, and we sawtooth for a while. We hit some all-time highs, we drop back down, and we just sawtooth from all-time high back to a new floor up until the crash at the beginning of May, at which point Bitcoin crashes over the next 2 months down to the lowest point in the year, eventually recovers, crashes again, recovers to a brand new high, sawtooths for a while, and then crashes into the end of the year, which is a lot of ups and downs for even in an unregulated market like this. And Litecoin basically looks the same, but the graph is a little more out of proportion because right before it crashes, it's all-time high compared to where it had been previously. The multiplier is ridiculous. But these two graphs are basically the same, just with one data point skewing it. Now, Ethereum is completely different because 2021 was basically the year of the NFT, and Ethereum is the host network for everything. Your apes, bored or not, your skeletons, your kitties, your cereal, everything is on Ethereum right now. There are other networks that these can be hosted on, like Cardano, but people are sticking with Ethereum. So 2021 just sees unbridled growth for Ethereum. We do have a crash right at that early May period, but after that, it's just growth to the end of the year with a little bit of lull. Now, what looked to just absolutely crush the market that wasn't Ethereum is this kind of threefold attack on the crypto market that leads to trader panic. So Elon Musk tweets, Tesla has suspended vehicle purchases using Bitcoin. Shortly thereafter, JP Morgan reported that institutional investors are dumping Bitcoin and going back into gold. 2 days later, China calls for crackdown on Bitcoin mining and trading. That last part was expected. People deep into the cryptocurrency market knew that this could happen, and so it was impactful, but not as impactful as the other two. Now, this leads into trader panic. Trader panic is basically, when it comes to cryptocurrency, volatility is in its nature, but when prospects look more doom and gloom, traders panic, they sell and stop trading. Therefore, the prices come crashing down. This is a gradual sell-off in risk assets. That's what cripples the rest of the cryptocurrency market. While that's happening, though, the suggestion is to move into Ethereum because it is the host for NFTs, which are picking up in popularity. There was also a push, while Bitcoin was crashing as hard as it did, to move into Litecoin, which could have absorbed a bit of the shock from that crash. But that is basically 2021 in a nutshell for cryptocurrency. Elon Musk and JP Morgan combined their powers to crush the market, stagnate growth for the majority of the year by creating these weird, wonky sawtooth spikes, while Ethereum just runs away. Granted, both Bitcoin and Litecoin did. Bitcoin ended up. Litecoin looks to have ended up slightly. You gained a whole $14 on the fiscal year if you're into Litecoin. If you're in Ethereum, you went from 32K a coin to 47. So you still made a handy profit if you were able to move your coins. But that was the market in 2021. And that's what I found pretty interesting, was that these three elements combined to just single-handedly take down that market. And it's happening again in 2022. We are currently in a tailspin for the entire market. This time Ethereum is involved, NFTs on the whole. And whether or not it recovers, if it recovers as strong as it did, we don't know. Also of note, we've mentioned before when talking about Bitcoin in the reserve list that Bitcoin is cyclical. 2021 was the end of the 4-year Bitcoin cycle. The first time where it wasn't just steady growth, where people just couldn't predict the end, where Bitcoin would end that year. It broke that cycle. So now Bitcoin is just kind of off in its own little world.
And it's, to me, it's interesting seeing like how the different coins compare to different types of things on the reserve list as well, right? Mm-hmm. So when you talk about those staples, your Cradles, your Lotuses, your UC, Lotus is, to me, Bitcoin's the closest analog.
Yes. Yeah.
Right. Like it's not close. Incidentally, I think UC is kind of like Ethereum in that, it has the liquidity, the playability, the accessibility, the utility really to be in everything.
Yep.
And Ethereum kind of has that. And then you have Cradle. Incidentally, it's kind of like the Litecoin.
I think Cradle is more like a lot of what's coming out now, which are proof of stake coins to take over something like Ethereum, because Cradle could be as liquid as UC or more, because it has
fair
more broad appeal. It's just the rarity of it and the price point of it turns people off. But I think it is more like something new, and as such should we treat it like that, just to kind of to go off the rails on that one a little bit. I think Dream Halls is more like Litecoin.
I think Grim Feast is just dope.
Yeah, but I don't think no that's a lie. You probably would wrap a NASCAR with Grim Feast.
Yes, I would, absolutely.
Like they wrapped a NASCAR for Doge.
Yeah, I would 1,000,000% buy a NASCAR and paper that thing with Grim Feast.
Yeah, you wouldn't even buy one wrap. You would just paste Grim Feast to the car.
A bunch of Grim Feast too. Yeah, absolutely.
Yeah, I rescind my statement. Yeah. For comparison's sake, when I look at Lotus, it doesn't trend well with crypto. It looks like it trends more like it would with the DAO.
So that's what I found, was that it kind of has that traditional, like, all right, well, we know this is the card, right? This has been the card since cards existed. This was the one.
Yeah.
And kind of like that staple Dow Jones, S&P, NASDAQ, these are the things you know. Mm-hmm. You know what they do. They make money. You don't know how. You just know every time you make a deposit into your IRA or your 401k, it grows. Yep. Cool. It's magic. There it is.
Yes. I'm going to bring up the graph real quick while we're talking about it, because if you look at stocks, it's difficult because these stepwise motions are individual sales. It's not smooth and gradual. But if you were to do a scatter plot graph, you could see a slope on Lotus that is actually kind of similar to what you see in the DAO.
It hits that high, and then it actually starts to retract a little bit. And that's kind of where we're at. We're not at the highs that we were, fall beginning of this year, when incidentally, January 2022, we hit the all-time high in the Dow. pretty much, late December, early January was all-time high for Lotus.
Yep.
So mirrors that very closely, actually. I'm also glad that we looked at this because, the thing I noticed incidentally at Boosts as well, because, contextualizing the data is important. When you look at the Lotus graph, like you said, it's single card sales. This card doesn't move on TCG Player. This moves on Facebook groups and private sales, at booths, all kinds of stuff. The buy list number is lower than it was in Japan 6 months ago, because now people can travel a little bit more, and we're seeing that kind of reflected in the price, so there's more access. So that was an interesting thing to see out of this for me. Was there anything about Dream Halls?
Yeah, so I have Dream Halls I have the most notes about because of the graph itself. Where is it? Boop. So Dream Halls is this fantastically sawtooth graph, and if you're looking at this now, you can see it comes barreling into the end of into the end of 2019 into 2020 at a negative slope. We're losing traction on Dream Halls. But what I was interested in was like these stepwise parts that we see. This growth and retraction that just is constant on Dream Halls, and in a non-secular fashion too. It's not like every 6 months here goes Dream Halls. No, it's so January 10th. Sorry, in January it's $10. In May it's a whole $11. Then it just leaps and bounds to $27. In when did we hit that?
Like September-ish?
Yeah, that was like September-ish. As people were kind of moving out of at a Litecoin. There's the plateau that I mentioned, I believe. Yeah. So let me bring this back up. These plateaus in Litecoin that happened in August, and the drop here at the end of August into September, and similarly with Bitcoin, August into September, that dip, you can see where it plateaus. People can throw money into the reserve list because it's right around the end of August into early September. We start seeing this big jump. Then it peels back off into January 2021 when we see our next big spike as we come out of the new year, and Bitcoin also takes a dump at the beginning of the new year, and Litecoin also takes a dump at the beginning of the new year. Well, here we are. Here's Dream Halls going from $28 to $69, right around that same time. And we start seeing this kind of mirrored action between the reserve list in a card like Dream Halls and the volatility in the crypto market, that people are swing trading essentially out of crypto into either more liquid assets or into more stable assets. And I assume you would find this in the stock market as well if we began breaking down all of the stocks available at that given time. But that's not what we're here for. We're here for the reserve list.
Yeah. So I think the interesting thing looking at the Dream Halls graph to me is it seems like every time we get back towards, like a little bit below where the spike was, all right, let's go up. And then it gradually settles back to the higher number, and then, goes up. And now, we've been kind of plateaued since October.
Yep.
Maybe we see that again. Especially since crypto just took a dump.
Yep, that's what I don't want to say that's what I'm hoping for, but that's kind of what I'm looking for now.
Yeah.
And what kind of sparked the timing of this episode, because a lot of the reserve list has been flat. One of the things that I'm trying to figure out, and this is like the last point I have about Dream Halls and the crypto market in general, is if we take a look at Dream Halls and we see, okay, on September 28th-ish is when we started the last time we see a normal graph for this card before it spikes again.
Yeah.
Right? It goes up to 75 by October 20th. It holds for about a month and a half, and now we're on the downswing. So to me, this is people just swinging into the asset and swinging out of the asset. So again, that's September 27th basically until December 4th. And when we take a look at like the Bitcoin graph, we see right at the end of September, Bitcoin starts to take off again in 2021, and it stays that way and eventually starts to peel back down. And that December date, when Dreamhall starts coming back down, Bitcoin is already in the middle of a crash. Similarly with Litecoin, September 27th, it's up. It peaks super high in the middle of November, crashes back down, and at the tail end of November, crashes basically into the new year. And that's like the last time that these graphs, that's like really the only time these graphs are kind of at odds with one another. And it made me curious to know what was going on with the crypto market, because generally speaking, if people are moving out of Bitcoin at any rate to buy into the reserve list, these numbers won't spike as hard as they do. It'll take a little while longer, because while there is movement in the Bitcoin market all the time, when people dump a decent amount, it does impact the market. It does slow that market. And
I
think this might be a sign that people are there just separating out their finances.
Yeah. I think it's really interesting that while that massive crash is going on in October, we see the opposite in the Dow. In that October, we're surging. We hit an all-time high at the end of December into early January. And sure, it's been a little bit downhill since. We have, a war going on in Asia. There's a bunch of stuff that contributes to that. But while those markets were kind of not crashing in the case of the reserve list, but seems like it in the case of crypto, your traditional markets saw a surge. So that was also interesting to me in the comparison.
Yeah. And it's the only card in the bunch that we're looking at that reacts that way. Everything else is flat through that time.
Yeah.
Even Grim Feast looks to be fairly flat. Dream Halls is the only one that holds this weird little stipulation. And I think part of that is just people are buying in and moving funds around, but because it's staying this high, it's floating this high, and it looks like we're going to head to a market correction where $47 is the new floor over 36, that there might just be assets being withheld from the market. And I think this is people putting their money somewhere else that isn't crypto because of what I mentioned before, that trader panic.
Yeah, the Grim Feast, conversely, is a very interesting one. So looking back 2020, it's absolute just flat land. It's marsh flats. It's a bad fetch land. Until the Cabal hits it in late August, early September, and we spike it up to a glorious $15. That's when, if you search my name in sick deals, you'll see a bunch of them for sale for $8. Then we kind of flat out again. And then all of a sudden, come early 2021, stimmy checks hit March, April, May, and what happens? A card on the reserve list that has very little liquidity and playability sees a surge. To me, this is less indicative of any greater financial powers than literally people hearing, I need to buy everything I can on the reserve list.
Yep.
It's that, echo chamber that, as a reserve list slumlord, I love, because you made my Emberwild Caliphs a $1 buy list briefly, which was a 10x for me. That was great. Thank you. But you're wrong, and you shouldn't do it. It's not smart. You want either your blue chips, Cradles, UCs, Black Lotus, or you want something like Dream Halls that has playability, that isn't just a penny stock, so to speak. If you're going to do a penny stock, be a man and go for Sarkhan's Unseen.
They didn't reprint it this year.
They did not.
Or this set.
Year one is down.
Or this set or something.
Yeah.
Give it
But
up.
that was interesting to me because, we talk about the cyclical nature of the reserve list and how every cycle new cards get added, right? Like it took forever for Fork to get included on this last upswing, but here we are. All of a sudden we've got it now. So it's interesting to see that and how it doesn't mirror other outside markets like you would think it would. Yeah, that's all I got for Grim Feast.
And the time that you were mentioning, like into that slide to end of year, like June, whatever, like all the crypto market aside from Ethereum is just in the middle of that crash in the summer. Like there's nobody's swinging on this downtrend into Grim Feast. So just to play to your point.
Yeah, not at all.
But I think that's all I've got for this week. So this is part 1 of 2, where next week we will discuss what exactly?
So next week we're basically going to discuss, all right, here's the data, here what we think it means, what's a sound investment in Magic, what's, year-over-year growth rates for crypto to S&P to our reserve list staples. We talk about how, one outperforms the other. We actually want to contextualize all of the data and talk about how that relates to reserve list singles as a financial vehicle and what exactly all that stuff means.
So that'll be part 2 next week, at which point you will also get our picks for this episode series. But until then, we are at MtG Cabalcast on Twitter, Facebook, Patreon, and YouTube. You can get the audio podcast wherever you can get an audio podcast. If you want to reach me directly, I am at Halt I Am Reptar on Twitter. You are
at Thirsty Sizzler.
See you next week.